COTI Network sits at 2 cents, down 97% from its all-time high. Most holders are underwater, price action looks brutal, and the chart screams caution. But here's what the surface doesn't show. The Heikinashi RSI just printed its most oversold reading in the token's entire history. Meanwhile, privacy coins like Zcash and Monero already ran. COTI is the only major privacy infrastructure play that hasn't moved yet. Combine extreme technical capitulation with a heating privacy narrative and explosive volume growth on PriveX, and you've got what might be 2025's most asymmetric risk-reward setup. I'm walking you through exactly why this level matters, what the fundamentals say, and my precise entry strategy with profit targets. COTI's trading between 2 and 3 cents after getting rejected at 5-cent resistance a few times. That October 10th liquidation wick down to 1 cent marked the lowest price since May 2020, a 5-year low. Broader sentiment is cautiously bearish, with many early investors sitting on massive losses. But timing in crypto is not about comfort. It's about identifying where maximum pain meets maximum opportunity. COTI sits at a critical inflection point, testing support levels that held in October 2020, while fundamental developments accelerate behind the scenes. The technicals tell us we're at a decision zone. The fundamentals explain why this decision could break bullish. And here's where it gets interesting. Institutional activity tells a completely different story than price action suggests. 3 major themes converged recently that reframe COTI's entire value proposition. First, the privacy narrative is fundamentally evolving. Legacy privacy coins like Zcash and Monero focused on hiding transactions, only one dimension of privacy. COTI Foundation made it clear. What comes next is programmable privacy, enabling smart contract logic, cross-chain workflows, selective disclosure, and institutional auditability. COTI positions itself as fast, programmable, and compliant crypto infrastructure. Second, real adoption metrics are accelerating. MetaMask just integrated privacy features powered by COTI's technology. For the first time ever, users can send, receive, and manage private tokens through MetaMask using COTI's infrastructure. This marks a major step toward real-world compliant privacy, from confidential payments to DAO voting and beyond. That's live functionality reaching millions of potential users. Third, PriveX perpetual exchange volume tells the on-chain story everyone's missing. COTI just broke a record, $30 million in daily perpetual volume. The time to execute 50 million in perpetual volumes accelerated from roughly 120 days to about 2 days. COTI's daily perpetual volumes now exceed Aptos and equal Bitcoin plus Kronos combined. That's institutional-grade liquidity forming in real time. Then there's the technical differentiation. Zcash uses zero-knowledge proofs for blanket shielding, hiding all data. COTI's garbled circuits model enables secure multi-party computations with data that stays private while being processed. Instead of everything hidden, COTI enables selective disclosures. What regulators can verify, users can protect, and systems can compute on, all without exposure. It's privacy that regulators can live with and fintechs can deploy. Ruslan Thor summed up the macro view. The privacy rotation is officially on. Major coins like Zcash, Dash, and Monero already pumped. What comes next? Programmable privacy. COTI sits at an $80 million fully diluted valuation with big exchange listings and institutional-grade infrastructure. The market is moving from hype to utility, and COTI sits right at that crossroad. Let's get into what the chart tells us. I'm looking at the 2-week time frame on COTI USD. Since that October 2021 all-time high at 68 cents, price has been falling inside a well-defined descending channel. We're now at the absolute bottom, testing support from October 2020. That's 5 years of price history saying this level matters. Since December 2024, price has been rejected repeatedly by a descending trend line inside the larger channel. Every attempt to break higher gets sold. We're currently below all major exponential moving averages, the 10, 21, 55, and 100 EMAs. That's full bearish alignment, no trend support whatsoever. The Fibonacci retracement anchored from 19 cents down to 2 cents shows our roadmap. The 236 level sits at 6 cents. The 382 level is at 8 cents. The 618 level, which coincides with the top of the descending channel, lands at 12 cents. To reach any of the next levels, price first has to break this channel to the upside. That breakout would be the first major structural shift since 2021. Volume profile shows the point of control at 5 cents, well above current prices, meaning most participants are underwater. The lack of volume at these lows suggests limited selling pressure remains, but also limited buying conviction. Here's the key. Heikinashi RSI just hit the most oversold reading in the token's history. Not just oversold, record-level oversold. Previous extreme RSI lows marked significant bottoms. This doesn't guarantee a reversal, but it shows capitulation is real. For my strategy, I'm scaling into the load zone between 2 and 3 cents. My stop loss sits slightly below that October 10th liquidation wick. Price tends to revisit liquidation zones, so I'm giving it room but staying disciplined. If the weekly candle closed below that massive wick, the structure breaks and I'm out. My take-profit targets follow the Fibonacci levels. TP1 at 6 cents represents a 3x from the low end, the 236 retracement, and first meaningful resistance. TP2 at 8 cents captures the 382 level, a 4x move. TP3 at 12 cents targets the channel breakout and the 618 retracement, a 6x from current levels. I'll scale out at each target, booking profits while leaving exposure for the full move. Trailing stops tighten as we hit each level. This is a contrarian play at major support with asymmetric upside, but it's also severely beaten down. I'm not allocating more than 3% of my portfolio here. That size lets me stay rational if it goes against me while capturing meaningful upside if the thesis plays out. Fundamentally, COTI is building real infrastructure at the intersection of privacy and compliance. MetaMask integration, PriveX volume growth, and programmable privacy positioning all signal increasing utility. Technically, we're at 5-year support with record oversold readings and a clear path to 6, 8, 12, or more if the channel breaks. Best case, privacy narrative continues heating up, COTI breaks the descending trend line, and we see a run to 12 cents, a 6x from these levels over several weeks. Worst case, price breaks below liquidation wick, invalidates support, and we see new lows. That's why the stop loss exists. What would change my thesis? A big fat volume weekly close below 1 cent invalidates the technical setup. On the upside, breaking and holding above the descending trend line with volume would be the first confirmation that this bottom might hold. COTI Network at 2 cents represents either a generational bottom or the final chapter before new lows. The Heikinashi RSI says capitulation is almost complete. The fundamentals say privacy infrastructure is heating up. The chart says we're testing 5-year support with clear targets above. My play: controlled risk at 2 to 3 cents, tight stop, and profit targets at 6, 8, and 12 cents. It's a 3% position, enough to matter if it works, small enough to survive if it doesn't. If you found this helpful, punch that like button. Join my free Telegram group for daily and faster updates. Link in the pinned comment. I've covered COTI before. Check those breakdowns on screen for more. Thanks for watching. Never financial advice. See you tomorrow.